Hello, traders. How are you? Hope you've been well. This is Wanjiru Bishangi of Forex Expert Online Academy. So today I'm excited to talk about pullback. So today's session is on pullback. This is something that I get people asking. When can we tell that the pullback is showing up or that the pullback is coming to an end? And therefore I'm excited to share my method. So what is a pullback? Pullback, or what you may call a retracement or a reactive move, is basically a movement to the opposite direction of the trend. So if you're on a buying trend, higher highs, this reactive move or retracement or pullback, then the market pushes passively, and there's a reactive move or retracement, then the market moves. And so because we know that the market does not move in a straight line, these moves here are what we call retracement or pullback. So basically what a retracement or a pullback or reactive movements is a movement of the market away from the trend or in the opposite direction. Now, if you're on a selling cycle, of course, you'll be making lower lows, then reactive moves making lower highs. If passive moves down, reactive moves making lower highs. If passive moves down. So this here, again, are what we call the pullbacks. This is on a downtrend, and this is on a buy. So we buy, therefore we'll be looking for buying after every retracement, and when we are selling, we'll be looking to sell after every retracement. Now, what are the pros or advantages? And of course, the disadvantages or the pros and cons of trading pullbacks. When you're a pullback trader, what advantages do you have? One, if you're on a buying cycle, you'll be able to buy low. Remember the mantra that I gave you last time, which says that we buy from the low and we sell from the high. This helps a lot with your psychology. Make sure that this mantra is met or you can actually see it. So before you get to a buy trade, ask yourself, is it at a low? If the answer is no, then do not take that trade. If you're taking a sell trade, always ask yourself, is it at a high? If it's not, then there is no reason for you to take a trade. So what are the advantages of trading a pullback? One is that you're able to buy low. Therefore, when you're using pullback to trade, that means that you're going to buy low. Because this is the higher high. This is on market structure. I hope you have time to watch the market structure video. So this is the higher high. Now, this will be a low, but it's a higher low. It's a low. So when you get into a buy, this is the point where you get into a buy. That's why I'm saying the advantage of a pullback is that you're able to buy from a low. And again, instead of chasing this trade along this impassive move, you can actually wait for another retracement. And when it gets to its lowest point, which is a higher low, now another higher low, now you can buy. If you miss this, and you find the market is pushing up, you don't have to chase it. You don't need to chase that trade. Be patient. There will be a pullback and it will give you another higher low and you can buy. Now, if you watch institutional reversal pattern video, it's very, very important. This is what we are applying to trading September. So make sure that you watch this video and don't just watch. Make notes and apply. So with this, now suppose you're on a selling cycle. If you're on a selling cycle, now you'll be able to say high. How? Because on a selling cycle, we'll be creating a series of lower lows. And on the other side, we'll be having highs, but they are lower highs. So at what point, if you miss this impassive move, you can wait for the reactive move. And at this point, what do? You sell. That's an advantage of using pullbacks because you get to sell high and buy low. Second advantage or another advantage is that it minimizes your risk. Now, what is the risk when we get to trading? When we're talking about trading, what is the risk? Now, risk is basically the amount vesting. Now, basically, this is how much you're risking in the market. Now, let's say you're on a sell trade or a selling cycle. You do not wait for a pullback and you make a mistake and sell at this point here. And then the market starts retracing. You're risking too much. Let's say it retraces to maybe 100 pips or 25 pips or 50, you'll be risking $100 for you not to be stopped out by this retracement. But suppose you're patient enough, suppose you're disciplined and patient, instead of chasing or getting into a sell at a low point, you wait for this retracement to happen and you get into the market at this point. And here, how much will you be risking? You'll be risking maybe $5 to $10. So when we talk about it minimizes the risk, it basically is minimizing how big your stop loss will be. Okay, so instead of getting into a trade, chasing the impassive move, wait for the retracement so that you can minimize your risk. Advantage number 3, it also gives you many chances of grid trading. Grid trading means you're able to add multiple trades or multiple positions. How is that? If you're a swing trader, if you have a peak trade 2 positions, then the market pushes, you get to the first pullback, you have 2 more positions, then it pushes, you're still holding your first lot, you have your second lot of trade, then we have the passive, then another retracement, you have 2 more, so we have now the third group, retracement, and now you have the fourth group where you have 2 more. The retracement will help you with grid trading because you can add your position as the trend continues. Now, this is the most profitable, and I'm not saying that everybody should do it, but if you can, if you have the confidence, if you don't have blood pressure, if you have the confidence, then this is the most profitable way of trading because it maximizes, it gives you the maximum returns on your trade. Because by the time this trade or this group of trade, group 4, is maybe ending or the market is now getting into a consolidation to change, you will have accumulated all the money that you earned through group 1, group 2, group 3, group 4, and you can imagine what the total will be. But now, don't make the mistake of, assuming or getting into the market and grid trading on your last part. So you'll be grid trading here and you have multiple positions, and then the market goes into a consolidation or sharp move up and continues and you get to it. So be keen on when to get out. We talk about when to exit this. And of course, if you're on the other side, if you're on the buying cycle, accumulation phase, you have the peak trades. Every retracement, you're adding position. Every retracement, you're adding position. So by the time it gets to the distribution phase up here, you've accumulated or you've maxed the market out. You've been earning all this money. So that is also an advantage. Another advantage that I want to talk about is the optimal entry when you're following the trend. Get to risk very little when you're working with your retracement against or the opposite if you could be chasing the impasse. Of course, it's not like very, very perfect. It's not like a super perfect way of trading. And of course, it's got to have its own disadvantages. And the disadvantage number 1 would be there are chances that you're going to miss a move. There are high chances that you're going to miss a move. Now, not all the time that the retracement will be happening and you're on your screen. And number 2 on how to miss the trade, it may not always retrace to your point of interest. And that happens exactly or very commonly on the middle level of the trend. You may be waiting for it to come back to maybe a block or support and resistance zone or a demand or supply zone, and then the market doesn't get to that point, and therefore you end up missing the move. The move can also be very fast. When we talk about a very fast move, can be passive like this, and then you end up missing the move. So that is a disadvantage. Disadvantage number 2 that I would want to mention is what we call being stopped out by force break. If a force break occurs, you may be stopped out. Especially people who use pending order. If you set a pending order, let's say you're again on a buying cycle, so you're creating higher highs and higher lows. So the market may, instead of retracing to this area and then going up, it may break that, it may break down, but then pushes. So if you had a buy, a pending order here, buy stop, and then you had your stop loss, it will be hit. But just because your stop loss is hit, that doesn't mean that the trend is not buying. So you'll be stopped out, but then the market will actually continue the older cycle. So this is also a disadvantage where your stop loss may be hit, especially in trade pullbacks using a minute. So trading order. So those are some of the advantages and disadvantages of trading a pullback. So when do you tell that the pullback is over? Now, the pullback usually reacts to 3 things. 1, support and resistance zone. The pullback is over if it gets into a previous resistance that has turned to support, because with this break here, no longer resistance, it has turned to support, and then the market will move. So how do you tell the pullback is ending or it has come to an end? Because it has approached a previous resistance and support. Now on the other side, you have the support, break, and resistance, break. So if the market breaks your support, now your support has turned to resistance. So this pullback here will end if it gets to that area. One, when do you tell a pullback is over? Of course, one, if it approaches previous total resistance. Number two is moving average, interaction with the moving averages. And number three is, of course, how it interacts with your trend line. I'm going to see this more on a chart choice. I already did a video on moving average, so you choose a moving average that works best for your trading item. So now this retracement is retracing back to your moving average, and this contact here is what we are calling the end. It will end. Now, how do you tell that it has come to an end after it has interacted with the moving average? Of course, you need to understand the candlestick language around here. And there is a video on the channel on how to check the different candlestick patterns or candlestick language around points of interest. So, of course, after the interaction with the moving average, is a moving average, and a moving average can be any of choice. Okay, so once you watch the video on moving average, you're going to pick the one that you feel is good. Same thing would be working for trend line. So this interaction here with your trend line, you want to see kind of language around here. You want to see either price rejection, or you want to see an engulfing, bearish engulf. You want to see an inverted hammer, or anything that has a reversal pattern thing to it. And once you get that, now you know that this pullback here has come to an end, and therefore you can join the trade to the bottom side. Now, what are the types of pullbacks that we have, or what are pullback setups? Of course, a pullback is a pullback, but they create different types of setups. So what are the types of pullback setups that we have? Now here I'm going to just discuss three. One will be the fake break setup. So when you're talking about the fake break setups, I assume that we're on a buying cycle. So we have higher high, reactive move, another higher high, reactive move down, another higher high, move, higher high, reactive move, taking that break. You see this area here, you'd expect that the market would always react to previous resistance and support and buy. In this case here, instead of reacting to the top, we see this fake break. Now, this fake break, how do you tell that it's actually fake, so that you don't try to sell, or you don't start looking for selling opportunities? Again, is to identify the candlestick language around this area. And once you do, you can actually get into a buy trade down here. If you get a buy reversal candlestick, this is better when you get into the market using the candlestick pattern instead of using an order, because if you had a buy order or buy stop at this point here, it will be stopped out. Your stop loss will be hit. Why? Because there was this false break. So this is one setup, and this setup is usually very heavy. I'm going to give you examples on a chart, and you're going to see that this is very, very heavy. It usually gives a very heavy move. So this is one trade setup. Setup number two is the simplest. We call it break and retest. You can still use this. So every resistance and support, you expect the market to come back to that area and trade away. So this is break. It has broken this to the top side. Let me change the color. So it has broken that resistance. It has become support. So here it was a point of resistance. It's a part of support. Now what do you expect will happen? When the retest comes, you expect it to still hold the support, so the market to push high. So this is setup number two. where a previous resistance stands to support. Now you expect the market to retest that support and of course move higher. Now, if you're a block trader, this is also what we call supply turned demand, then retest of the demand. Then if you're a pivot trader, of course, the same thing. If you're support and resistance, it's the same concept. It's a zone. It's a flip zone. We are changing. Money is changing hands. Watch the support and resistance video. You're going to see examples of flip zones where money is changing hands from the sellers to buyers. Once it becomes support, you expect it to be retested to the top side. Okay, so that is the second. Of course, it's the same even if you're on the selling side. This was previous support. Now it has become resistance. So what do you expect? You expect the market now to retrace back, retest it as a resistance point, and the market should go lower. So this is the same setup, break and retest. Now, the third trade setup that I want to talk about is called the fast pullback. Now, fast pullback, just to be clear, does not necessarily mean the fast retrace. 80% of the time, it's going to actually mean that the fast pullback. But it also happens at the late stages. At the late stages, you're going to get that. Now, how does the fast pullback happen? Now, sometimes when the pullback is happening, it may not get to this area. You're expecting this market to get to this area because this was resistance and support. So you want this market to actually get to that support so that it can buy. And maybe you actually placed your orders. You have buy orders at this point, at this price point. But the market does not get there. It gets 3/4 of the way and just shift away. So do you miss this? Because this is an opportunity that you can miss if you're waiting for it here and it doesn't get to that point. It means that you will not be part of that trading. So what can you do? You can add a moving average of choice. Watch the moving average video to note the moving average that is appropriate for that kind of trading. So you're just going to add a moving average there. At the point where your retracement reacts or meets your moving average, there is the bullish candlestick pattern. Bullish candlestick pattern. Reversal pattern can be bullish and gapping, can be a hammer, etc. You can watch that from the candlestick pattern video. If there's the candlestick language for buy at this point, now do not wait for it to get here. Just join in depending with the candlestick language at this. That's how you do not miss the trade if it does not get to your point of interest. And this is what we call the fast pullback. The same would be true even on the other side. If you're selling or if you're on a selling cycle, you're making lower lows, and of course the reactive moves to the top. So you're waiting for the market to react at this point here, but the market does not get to it, so it goes maybe 50% or 30% and changes direction. So instead of missing that opportunity, you can actually add your moving average of choice. And at the point where the market interacts or gets to your moving average, at this point here, be keen on the candlestick language. And if it has a bearish reversal pattern, candlestick or candlestick pattern that is a reversal based, then now you can join the market to the downside without actually waiting for it to get to this point. So those are the 3 trade setups that you can trade or get into when you're trading the pullback. Of course, there is the other candlestick patterns that show up as part of pullbacks. You can get on the middle level, at the middle stage of a trend, you may get a head and shoulder. At the middle level, that doesn't mean that we're getting to the peak. No, it's just at the middle level of a stage, they can give you a head and shoulder, or they can give you an inverted head and shoulder at the middle of the trend. So that is also another pullback trade setup. Now, how do you get into the trade when you're trading pullbacks? How do you get into a trade? I think I've mentioned that at every point of retracement, you want to check the candlestick language. If it doesn't get to your point of interest, you want to check how it's interacting with your moving average. Again, if it's on a trend line, how it interacts with your trend line, you want to be keen on the candlestick language around that area, and therefore you get a great setup. Where do you place your stop loss? Of course, when you're pullback trading, you want to place your stop loss. If it's on a buy, you want it to be at the bottom side of your low, the lowest point of your pullback. If you're very conservative, you can go to the previous low and have your stop loss on the previous swing low. If you're on the selling cycle, you want your stop loss to be at the high side of your retracement. And of course, if you're very conservative, you can take the previous swing low. Now, how do you exit? Your first TP should, of course, be, if you're on the selling cycle, your first TP should be your previous swing low. If you're on the buying cycle, of course, your previous swing high should be your first TP. And then you can let the market, you can maybe take partials on the first to the top or run. And that will be also bring your account, because when you just hold the trades and you're not taking partials, remember, you make money by actually closing your trade, not holding your trades forever. You need to close your trades for money to get into your account, because trading money, as long as the money is on a trade, that is not your money, that is the broker's money. It becomes your money once you close that trade and the money goes to your account. Now, on the bonus, on the best pullback setups of the high probability, let's first get to the chart. Start note, it can be on any type. Australian dollars against dollar, and here we have the market coming to a low. This is on 15-minute time frame. We've been selling this market, got to the low, gave us the double bottom, and we break up market structure. Now, we expected the market to react. We expect the market to react from this zone here, but it didn't happen. Why? Because we also get the micro structure. So this is the external structure. We get the micro structure down here. This is the base drop that gives you a thin supply zone. The supply zone was reacted once. You can see this cell here. It's a reaction of that base, and then got finally broken to the top side by a green candlestick. So what happens when a supply zone is broken by a green candlestick? It becomes a demand. So the market is bound to at least retest that supply and demand zone. And that is what happened here. You have this reaction, this reaction. And what happens when you have so many catches, or when there is this accumulation? Anytime there is retest and there is a phase of consolidation, be sure that the market is accumulating more volumes for the next push. So know that this is a good sign. When this happens, don't try to chase it here. If you have to add entries every time the market comes back to the zone, because at the end of the day, this is what is going to happen. This is a very heavy, explosive move. Again, we have this explosive move. We have a base. We've been rally base. So the market comes back to the base. Then there's this consolidation again. We test of the same base, and this is what happened today. So this is an example on the 15-minute. Then we also have the same on the daily. Resistance and support. The market comes back to the same area, buys. There's also the aspect of false break. So this was supposed to be a buying zone, but what happened? There was a break to the bottom side. So this is a good example of the false break setup, where there was this false break. Now, how do you tell it's the false break? Of course, you check the candlestick language around that area, and also the interaction with the MA. Look at the moving average. Look at the candlesticks around that interaction. So you know that this is surely not a break. We are not ready for the sell move or the down move. This is just a fake. It's a false break. And with this candlestick here, you're ready to get into a buy. And of course, you push the market back into the supply zone. But when the break now is real, you can see the break is given by a very decent candlestick. The same thing here. Now we have the base drop, making this an awesome supply zone. And remember, it was a previous demand zone from this area. So it's a demand turned supply. You expect the market to test, and it has been doing asking touches, and every time that happens, these trend down. Another example, here we have supply, resistance and support. So the market has been pushing up, up, up. And here we have a false break. Then the market gets back. Now, how you tell that this is a false break? Again, you see this huge bullish engulfing candle. There is no a break. A real break can give you a reversal, a bullish reversal candlestick pattern. So this pattern here shows that that was false. There was still some more buying. So that's an example of a false break. More examples. So we have the fast pull. Now remember, the fast pull is where the market does not get to the actual point of interest. So we have this demand turned supply, and you can say this support turned resistance because it was broken to the bottom side. You expect the market to break or to retest back, but it didn't. So what happened? It did not get to the point of interest, but it reacted nicely with our MA. And now what you do once this interaction happens, now you check the candlestick language. And what do we get here? We get a very beautiful bearish engulfing pattern. So you can actually join the trade from here as a sell, or you can wait for retracement, 50% retracement of that engulfing candle. There's a video of that I've explained how to trade the engulfing candle. So you can wait for that retracement and join the trade. And here, support broken, become a resistance, and of course, it's retested back. There's also the MA interaction. So be very keen with the interaction, but this is a good break and retest. Again, we have a break and retest where we have this demand turned supply, and this was a good flip zone. So it was a buying point, then it turned to be a selling point. So the current market on this tradable item is here. So we have this demand turned supply zone. So these are very pretty zones. You'd expect the market to get here, but it doesn't. Now we'll be paying attention to the interaction between our two MAs. No, around any of this. We'll be looking for any candlestick language around these areas. So that's really know how to trade these tradable items. So these are some of the examples. Of course, you can open your favorite trading items or tradable items and check or back test on the three types of trade setups, and of course pick the best that you want. Now, which is my best pullback setup? My best pullback setup is the break and retest. This is usually very heavy, and you can see after the break, it gives you multiple chances to join in, and it's usually very, very heavy. Every time that happens, it gives you another chance to get in, and it really pushes us. So the break and retest version, the break and retest setup, it's my best, my favorite among the four, because it has very high probability. To the new members of the Expert family, subscribe, click on the notification bell so that you're notified every time we have a new video, and leave a comment about this video and also future videos you'd like us to add. To all our other members, we appreciate your continued support. We learn and grow together. I'm Wanjiru Bishangi. Until the next video, I wish you the very best. Bye-bye.